Hey, what's going on, guys? It's your boy Tyler, bring you fundamental news on a fundamental basis. Today's article is brought to you by CNBC. Dow drops more than 300 points, turns negative for the year as bank fears grow. Stocks declined Thursday as contagion fears in the regional bank space were reignited. Investors also digested the Federal Reserve's 25 basis point rate hike and commentary following its Wednesday meeting. In my opinion, this is only the beginning of the bank run. The banks are going to consolidate until there's only 6 banks left, and then they're going to usher in the central bank digital currency. The Dow Jones Industrial Average fell 343 points, or 1%. The S&P 500 slid 0.8%, and the Nasdaq Composite dropped 0.5%. The Dow turned negative 0.3% year to date on Thursday. Declines in Boeing, Disney, Goldman Sachs, and American Express shares pulled back the Dow. Shares of PacWest tanked by more than 14%. I think PacWest is another bank stock. The decline came after news that the California bank has been assessing strategic options, including a possible sale. A person familiar with the story told CNBC regional bank shares sold off hard, with the SPDR regional bank ETF dropping almost 9%. 9%, don't get me wrong, I didn't say 90%, sorry guys. Western Alliance tumbled 39%. Those are all banking stocks. And so trading halted multiple times due to volatility. Meanwhile, Zions Bank Corporation lost 13%. There likely won't be a respite for the embattled regional bank sector until the Fed cuts interest rates, said Jeffrey Gundlach, CEO of Double Line. Since the closure of Silicon Valley Bank in March, First Republic has joined the ranks of failed institutions and was recently taken over by JP Morgan Chase. Levying rates this high is going to continue the stress. Gundlach said to CNBC on Wednesday, I believe with a very high degree of probability there's going to be further regional bank failures. Exactly what I said, guys. You heard it here first. This is not the first bank to fail. There's more coming. As the Fed pushed through its 10th rate hike in this cycle and the central bank seemed to soften its language on future increases, Jerome Powell said it may be too soon to cut. We on the committee have a view that inflation is going to come down not so quickly. He said in his post-meeting press conference, it will take some time, and in that world, if that forecast is broadly right, it would not be appropriate to cut rates, and we won't cut rates. They printed so much money over the COVID pandemic that all that money is causing inflation. So inflation is going to be relatively high for a while. They're going to have to raise interest rates a bit higher than they already have. But that's going to affect the housing market. Real estate, it's going to affect real estate. Real estate is going to come crashing just like it did in 2008. But most importantly, it's also affecting the banks that are holding these papers, these mortgages. So yeah, guys, here you have it from CNBC on the 4th of May 2023. Danko.